Assalamu alaikum wa rahmatullahi wa barakatuh, brothers and sisters and dear friends. Hope you guys are well, inshallah. Today I'm here for a specific reason. I'm a Muslim like you guys, and alhamdulillah, when it comes to the issue of riba, this is something that we are all afraid of. It's something that we all try to abstain from. And we don't need to go into the details of the severity of the sin. We look for solutions, sometimes we can't find solutions. And there are people who follow the fatwa that you can buy your first house on riba. But obviously some of us hold the opinion that to be better on the safe side, alhamdulillah. And sometimes Allah subhanahu wa ta'ala says in the Quran, in Surah Talaq, Allah says in the Quran that if you fear me, I will give you a way out from places you can never imagine. So I believe in this concept. Allah subhanahu wa ta'ala will always give us a way out. And I am here with two amazing brothers, may Allah bless and preserve them. They're called Pfida. Usually I would pronounce it as Pfida, but we'll come to that in a minute. So we've got Brother Reza, Assalamu alaikum.
Assalamu alaikum.
And Abdiyah Sheikh, how are you?
Alhamdulillah.
May Allah bless you. Can you guys just introduce yourself a bit, please?
Yeah, I'll let Reza start.
Yeah, so I'm Reza Ullah, I'm the CEO and founder of Fither. I founded Fither back in 2016. By background, I'm an actuary, which is effectively a complex statistical modeler. I've worked in the London financial markets all of my life, for the likes of PwC, the Bank of England, Lloyd's of London Marketplace. And I had a life-changing experience on Hajj in 2016 when I realised that with the skill set that Allah has given me, I have a duty to try and do some good with that skill set and try and create some benefit for the Ummah. So I gave up my role at the Bank of England as soon as I came back from Hajj, and I started setting up Fither with a view to providing a better way for providing home ownership, particularly for Muslims, that is completely free of debt and completely free of riba.
My name is Salman Hassan. I'm the Chief Legal Officer and also Head of Sharia at Pfida. I was about to say Primary Finance, that was our old name. So my background is I'm an Islamic finance lawyer. I only ever practiced Islamic finance. I worked at an international city law firm, both here and in Dubai. Worked and advised all the big international banks across Europe and the Middle East. But I was very disillusioned with what's happening in the Islamic finance world because a lot of it is reverse engineering. They take non-Islamic interest-bearing products and then quote-unquote Islamize them. They sort of squeeze them into Islamic or Arabic labeled contracts, but really the economic substance is exactly the same. And so I was very disillusioned by that, and I left my practice and started looking for greater purpose, something I could do to serve my community. And then Raza came along and told me about his journey, and I joined his journey, and here we are today.
MashaAllah, amazing. So you guys want some Fida for the community?
I mean,
Is that what the P, does the P stand for people?
it does. So
I'm just guessing, of course, I don't know.
So the word Faidah, as many people will recognize, it means benefit in many languages, in fact. So in Arabic and in Turkish, also in Urdu and Bengali, many different languages. And the P actually stands for people, as you say, because our intention is to always put people first and bring great Faidah to the people.
May Allah bless you guys, inshallah. And I went on your page, because I didn't know about Sheikh Salman. May Allah bless him as well. And to me, like Sheikh Haytham is someone that I know as well, alhamdulillah. And I thought to myself, yeah, I need to take this to Sheikh Haytham, see what he says. And then I went on your website and I saw his picture. And I was like, say no more. Okay, so let's get straight into it because we're tight for time, inshallah. So tell us a bit about how does your product work?
Yeah, so to understand our product, you need to first understand the two extremes of home ownership. So on the one extreme, you've got a mortgage, where you borrow money from the bank, you own the property on day one. And no matter what happens to that property, it's your headache. You still owe the hundreds of thousands to the bank. Now that is a straight up loan, and any interest on that loan is straight up riba. The opposite extreme is renting, where you don't own the property, the landlord owns the property. Now, you don't take any of the headache in the property in that situation. If the property is destroyed with a mortgage, you still owe the money to the bank. If the property is destroyed or anything happens to it when you're renting, it's the landlord's headache. You can move on and move to another property. You don't have to worry about it. Our product is somewhere in the middle. It's the concept of owning part of the home and renting part of the home. So rather than us lending money to the customer, we buy the property with the customer as partners. The customer can rent our share, and that is the only obligation. So the way to think of it is, imagine you're renting from a landlord. Your only obligation to your landlord is to pay your rent on time every month and take reasonable care over the property. You can go to your landlord anytime and say, I'd like to buy your property from you. And the landlord may say, yep, sure, you can buy it from me, that's absolutely fine. But you don't have to. It's up to you if you want to. And that's the same with our product. So maybe you own 20% or 50% up front, we put in the remainder. You just have to pay rent on the part of the property that isn't yours. And if you want, at any time, you can buy us out as well. You can offer to buy shares at any speed you like, or not at all. You can just rent for the rest of your life if you like. It's entirely up to you. So it's a very, very flexible approach. It's based on genuine partnership, which means we share in the risks of partnership. So the acid test is what happens if the property is destroyed. In a mortgage, you owe that money to the bank. Even in an Islamic bank mortgage, you must immediately buy the bank's share off of them for the asset which no longer exists. Whereas in our partnership, we take the risk together. If the property is destroyed, you take the loss on your share, we take the loss on our share, and that is what defines a true partnership.
Okay, that's brilliant. I'm going to come to more questions a bit later on that. There's another product that you offer, which is the
Savings accounts.
Yes, just touch up on that, please.
Yes, so we offer savings accounts as well. Effectively, when you put money in a bank, that money in a conventional bank is used to lend with interest. So many people don't realise this. When you put £100 in your bank account, you're actually agreeing to let the bank use your money to lend with interest. And as Muslims, that should make us extremely uncomfortable. Even Islamic banks, when you put money in an Islamic bank, all banks, all regulated banks, this is how the banking system works, they use that money to print new money. And the act of printing new money devalues the very money you're putting into the bank. And the people who suffer the most from that are the poor. So the banking system is actually designed to make the rich richer and the poor poorer. So the way our savings accounts work, there's no money creation, there's no ribawi lending. We use that money specifically to put people into homes in a debt-free, riba-free mechanism, and you get a halal return on that in the form of a share of the income that we're receiving on those homes. So it's a very, very halal savings account. You know exactly what your money is being used for, and it's by virtue of the fact we're not printing new money, it's not contributing to the widening of the rich-poor divide. The other thing to think about is when you put your money in a bank account, because that money is devaluing your money, it makes it harder for you to buy a house. Because it actually...
It's a perpetual cycle.
It's a perpetual cycle. So actually the very worst thing we can do is leave all of our money in a bank account. Yes, banks serve a purpose. We need our everyday cards to spend on every day and draw cash from the machine every day. But leaving all of our savings in a bank account, that is what's promoting the inflationary cycle, which is making houses more and more unaffordable. And actually, we as Muslims need to do better. We need to be putting our money in places which don't price us out of our own homes, and which we know is only being used for halal and promoting wealth, particularly amongst Muslims.
Okay, so personally, like for myself, if I have a certain amount of money in my account, instead of it sitting there and the bank using it as riba, which I do not want to, but it's because I have no other choice, if I put it here, the only catch with you guys is that you can't deposit it. It's an investment. So it's a saving account, but it's not your typical. So when you put it there, you get a return on it. It's an investment because you're using it to invest in properties.
Correct, exactly.
Which is your other product, which if there's homeowners who want to buy a house. So if you have money, which you guys are, if there's anyone watching, it's like, okay, I have this much money and it's going to be sitting in my account for 1-2 years. Instead of it being used for riba, put it here, whereas it's an investment.
Yeah, so generally speaking, the worst thing you can do is leave all of your money sitting idle. As Muslims, what we need to do as a community is we need to skill up and we need to get used to and comfortable with the concept of investing. It's also equally not sensible to invest all of your money in one place. So I'm not saying people should take all of their money and put it with Fither, but there should be an allocation for something like this, which is a low-risk alternative to a bank account. There should also be an allocation, and we should get more comfortable with this, to high-risk investments. Maybe it shouldn't be a very large allocation, but as you get more and more comfortable with investing, this is what we as a community need to get better at. The worst thing we're doing as a community is hoarding all of our wealth in one place, in a bank account, where we don't benefit from that money, the poor don't benefit from that money. The only people who benefit from that money are the wealthy bankers who are already wealthy enough. We need to do far, far better as Muslims, and that's why we've created our Fither savings account, to provide one alternative to that.
Okay, that's well and good, alhamdulillah, and your name is very unique. But the people are going to ask the question: what is unique about what about other products? For example, how is it different to other products?
Yeah, so let's compare to a conventional mortgage, and also to an Islamic bank mortgage, and also to other shared ownership products. So in a conventional mortgage, as I mentioned, it's a debt. You're borrowing money from the bank. You have to pay that back with interest, and most Sharia scholars will agree that's not permissible. There is the exception where some scholars allow you to buy one house on a mortgage. If we take an Islamic bank mortgage, the way it works is, rather than the bank lending you money, the bank buys the property, and you must now buy the bank's share out of them over a set period of time for a set price, no matter what happens to the property. And this has Sharia grey areas in it, and it does definitely create a divide in some Muslims are happy with it, some scholars are happy with it, and some are very, very against it. Sheikh Haytham al-Haddad, who has approved our product, is one of those scholars who does not agree with that approach, and Sheikh Salman will talk to that a bit more. The next product is a shared ownership product, which is actually the closest to our product. But most shared ownership products, what they do is they say, right, you own part of the property, you rent our share, and you can buy us out over time, which is exactly how our product works. But the difference is most shared ownership products will say, when you want to buy our shares from us, we will revalue the property and you will buy them from us at the current market value. Now, we know in the UK, property prices tend to increase 5 to 10% per annum, year on year. Wages only tend to increase 1 to 2% per annum, year on year. What this means is the property becomes more and more affordable over time because wages don't keep up with property prices. Now, what this means is most people on shared ownership schemes will never be able to fully own their house.
Rigged system, in a sense, where, because it's like you're just, in a perpetual cycle.
Like a rent trap.
Yeah, it's like a rent trap, because as it's increasing, you're not buying nothing. You might be stuck on 50% for the next 10 years because of the way,
It can, the longer you wait to buy out the property, the more difficult it becomes. And that's the problem with most shared ownership.
Are you telling me that Pfida sticks to the price that was agreed on?
Correct. So what we,
Why would you do that? People would say, why would you do such a thing?
Well, the question is, why did I leave my very lucrative city job to set this up when I could make much more money doing what I was doing? And it's because I feel I have a responsibility. As I said, I had a life-changing experience on Hajj, and I know Sheikh Salman has the exact same vision. So I set up Pfida with a vision and a view to try and increase wealth, particularly amongst Muslims, and increase home ownership, particularly amongst Muslims, because you do not need to be poor to be financially excluded. Muslims are financially excluded from investment products and finance products just due to their faith and due to the fact that RIBA is not permitted. So we decided actually the only way to enact that vision is to sell the property to customers at the original cost to make it affordable. And we created our business model around the rental income we receive. So that's how we make our money, from the rental income. We decided that we won't take the upside on the property value, with some exceptions. So when the customer is buying the property from us, we sell it at the original cost to make it affordable. However, if the customer wants to sell the property, now they're actually making a profit on the sale of the property. And as partners, we have taken risk in the property. We are genuine partners. It's fair in that situation that we take our share of profit as well. But as long as the customer is buying it from us to make it affordable, we sell it at the original cost. And that's our way of enacting this vision.
Okay, that's brilliant. I'm going to go to the Sheikh Salman, inshallah. Before I do that, because even when I'm giving dawah, I try to stick to simple terminologies. Yeah? I don't get the whole... I just keep it very simple so people understand. So the agreement between, let's say, for example, there's a £100,000 house. Argument's sake, I bring £50,000. Inshallah, I'll have that money one day. And I give 50,000, you guys put 50,000, we have a house. So the asl is, we are going to rent it. So let's say the rent of that house is £1,000. Because I own 50% of that, and you own 50%, Pfida, when we rent it, you take the rent from, you ask me, should we rent it out? Would you like to rent it yourself? I say, let's rent it out. So we rent it out, I take £500, you take £500 every month.
So the way it works is, let's say you're living in the property.
Let's say I'm not.
Okay, so you want to rent the property out.
Yes.
So what we'll do is, we'll say, look, our contract is for you to rent the property from us. Okay. Now, how you pay us your rent is up to you. You can have your own tenant if you want. You can rent it out to somebody else, and you can pay us from the rent you make from your tenant. It's entirely up to you. Okay. And that means you can rent the property out if you want to. Or you can live in it and you can pay the rent yourself.
Okay,
so
the asl is not that you rent it out, the asl is that I rent it out.
Correct.
Or I rent it myself. Correct. Sorry, I thought it was the other one. Okay, so meaning that I can choose to say I'm going to rent it out to David, and David pays rent, I'll give you 50% share. Do I give it, or are you guys managing that?
No, so the idea is we don't want to be involved in your business.
Okay.
So you have complete discretion over who you want to rent it out to. And that's why we say, look, on the 50% of the property, so normally the property rents for £1,000, yes. On 50% it's £500. Yeah. So you just pay us the £500 rent every month. You can rent it to David for £5,000. It doesn't matter. You just have to give us 500, which is for our share.
The value of the rent of the area.
Exactly.
So if I say, I want to live in it. Yes. Therefore, what I do is I owe you that £500 because I already own the 50% of the...
Correct.
Simple.
Exactly.
Let's go to the Sharia side with Dr. Salman, inshallah. Sheikh Salman, may Allah bless you. So what is your approach to the Sharia compliance when it comes to this?
Yeah, so and as I said in the introduction, I was very disillusioned with the approach taken by Islamic banks, and in the law firm, I was, as a lawyer, able to pop the bonnet of all of these contracts and look underneath. Most people don't have the ability to do that.
Yes.
And I could see what they were doing was reverse engineering. They were taking interest-bearing contracts and doing exactly the same thing, but just doing it through a different contractual structure, if you like. We call that reverse financial engineering, and that's not the approach we take. So we take a purist approach, and that goes to not just the letter of the Sharia, but also the spirit of the Sharia. So what is Allah's, we call it qasdu Sharia in Arabic. What is the hikmah or the wisdom behind why Allah has prohibited riba? Because if Allah's prohibited riba, it's not just because it's prohibited, it's because it has a harmful effect on society and us and everything,
Yes.
right? But if we're replicating that harmful effect by, quote unquote, applying Sharia contracts, but doing exactly the same thing, the economic effect on society is going to be exactly the same. And so not only does it have the same harmful effect, it has the fasad or the mafsada that non-Muslims will look at Islamic finance, and they do. I've been in embarrassing situations with non-Muslim lawyers who look at Islamic finance contracts, Islamic banking, and say, well, you're just doing the same thing. How is that Islamic?
Exactly.
And it's embarrassing because this is supposed to be a da'wah. We're supposed to show society and the world that Islam has a solution to a corrupt financial system. But if actually we're replicating the corrupt outcome of that financial system through the quote-unquote Islamic financial system, we're not only doing a disservice to the community and society, we're doing a disservice to Islam. This is harmful for da'wah.
Yes.
And so having studied Sharia, because I studied Sharia out in the Middle East, in Syria, back in the early 2000s, I dedicated my life to trying to live that Sharia and apply it, but practicing as an Islamic finance lawyer, I was kind of doing the opposite. And so our approach, and this is testament to, alhamdulillah, our purist approach. When we first went to Sheikh Haytham and presented our product to him, he asked us one question, and he said, do you force your customer to buy your share of the property? So you bought it together, as in the example you gave. He said, do you force your customer to buy your share? Because that's what puts the customer into debt. Because if we've effectively sold our share to the customer. Exactly, yeah. And so, look, at the end of the day, in layman's terms, let's put it in layman's terms. If I put somebody into debt, regardless of how I put them into debt, I could put them into debt by giving them a loan.
Yes.
I give you £100, you owe me £100. That's a simple loan, right? Or I could put you into debt by saying, let's enter into a co-ownership on the house. It's a £100,000 house. You put in 150,000, we put in 50,000, but immediately in the same contract, we force you to buy our share for exactly 50,000, right? So can you see the co-ownership doesn't exist anymore? We've sold our share, and you're going to pay us installments over 20 or 30 years, right? So now all the liability is passed on to you. You owe me, the Islamic bank, a money debt, right? You see, so we've created a debt in a roundabout way.
Yes.
Now if I charge you more on top of that debt, what have I done? What is charging more on top of a debt? Isn't that the basic definition of riba?
Exactly, yeah.
So that's the approach we take. We take a really purist approach, and we don't do that.
They're not giving any Fither to the people, are they?
Well, if you're putting people into debt, then you've got the same negative effects of debt on society.
Exactly, and we want Fither for the people.
Alhamdulillah, yes.
So, okay, so next question, Sheikh, is what makes Fither home finance product Sharia compliant?
Yeah, so this is, I mean, I kind of already explained it.
Yes.
So what we do is we enter into this co-ownership. So, simple example, we put in 50,000, you put in 50,000. Now, at this point, we're partners in the property, right? And the Sharia requires that we have to share the risk and the reward of that partnership.
Yeah.
That's what happens. If I sell you my share immediately, I'm not sharing that risk or reward. I'm just simply putting all that risk onto you. That's the first thing, right? So now we've said that with the Islamic banks, they sell you their share and then they charge you rent on that share, rent on top of that debt, and that's not allowed. What we do is we say, you don't have to buy our share if you don't want to. Okay. If you want to, you can, and our policy is always to sell our share to you at the original acquisition cost. Why? Because of that khidmah, that fayda, because we want to facilitate affordable home ownership for the community. We don't want to put them into a debt trap or a rent trap. And we've created that middle path. Yeah. So you now have the option, but not the obligation, to buy our share of us. But until you've done that, what your obligation is, because you're living in that property, or you've taken responsibility for that property to rent out to another person, you've taken a lease out on that property or our share, you will then pay us rent. That's your only Sharia obligation on a month-to-month basis.
Okay, brilliant. So, the third question, I think you already answered it. What's wrong with Islamic banking?
Yeah, we've kind of explained it. Yeah.
Explained it, yeah. So, what makes Fither investment saving account Sharia compliant? So that's your other product that you guys do.
Yes.
Yeah. How's it Sharia compliant?
So what we do is we've got this really beautiful system. We've effectively created what I would call a sort of housing cooperative or a housing committee. Right? In the community, we have people who club together and they have these credit committees. Yeah. We've kind of writ that large, and we have a housing committee where instead of people putting their money in the bank, then what the bank does is use it for haram reasons. And what the bank does is actually lends our money back to us and charges us more for it. The bank is effectively a middleman, right? And then that's how they fleece money of society. They take our money and then put us into debt with our own money, right? What we've done is we've effectively opted out of that system. We say, right, if the Muslim community if we put our money into Islamic financial institutions that are genuine and purely based on Sharia, then we can aggregate our own capital and we can help each other buy our own homes and cut out the bank, the debt-based system. Do you see? So that's effectively what we've done. So when people open up an investment savings account with us, we take that money, we use that money to finance the homes of the people who are our customers. And then from that rental income, we take a share for managing the scheme, and then we give a share to our investors. So what our investors are getting is a share of the rental income from a property portfolio.
Interesting. Okay, that's interesting. So what do they get yearly, like percentage?
It will depend. Yeah, I'll let Raza answer that because it will depend on which accounts.
Okay.
Yeah, so just to answer that very quickly, we have different savings accounts, and we've got one savings account aimed at people looking to buy a home with us. We have another savings account aimed at people who aren't looking to buy a home, they just want to put their money and get the best return possible. At the time of recording, that account pays up to 4.7%, and that's paid in the form of dividends, which have their own tax-free allowance in the UK. So generally, unless someone is using their dividend allowance elsewhere, they can invest up to £20,000 with us completely tax-free, right? And also, it's also worth mentioning the Zakat treatment here, and maybe Sheikh, you can talk about the Zakat treatment on the investment as well.
Yeah, so firstly, we don't advise our customers on their Zakat treatment because, as you know, there are different schools of opinion within Islam on the treatment of Zakat. So we ask people to get their own sort of views from the madhab or the imam that they follow. But what we do is we do provide information on what the possible Zakat treatments could be. Now, there is a strong body of opinion within Islamic law that if you buy a property and you rent that property out, you activate that property for a useful economic purpose. You've given somebody else a home, they're giving you a rental income. There's an economic purpose there, and the Sharia in that view says that Zakat is not due on the capital amount of that property. Yeah, because if you think about it, if I buy a property, I've got £100,000 savings. I buy a property with that, and I rent that out. If I then next year have to pay 2.5% of that property, I might not have that. I might have to sell the property, which is giving me an income and giving somebody a home, in order to pay the zakat. So the Sharia doesn't want to sort of put somebody out of their home and put me out of my income. Do you see? So what the Sharia says, you pay zakat on the rental income of that property, not on the price that you bought the property with. Right? Now, if you think about it, when people open up an investment savings account with us, their money goes into buying properties which are rented out to our customers, you see. So the zakat treatment of that whole portfolio of those investment savings accounts is that, according to this view, which is a sort of a majority view within the Sharia, that zakat is not due. Now, of course, we have many of our customers who say, I just pay the zakat anyway. Yeah. So what we do is when their zakat date comes, and they input their zakat date on the app that they have with us, we send them a notification that this is how much you can factor into your own balance sheet in order to calculate your zakat, and some people pay it and some people don't. It's totally up to them.
So if they don't, so you said, did you say 4.7% or the? Okay, so is that including the 2.5% of the zakat that they don't need to pay in that 4.7%, or is it?
So that's the return that you can expect to get to your bank account. Now, if you follow the majority opinion, there will be no zakat to pay on that. But some people take a more conservative opinion and they pay zakat anyway.
So for the ones that don't, do you add that 2.5% into the 4.?
No, so the 4.7 is the return you get to your bank account. If you imagine comparing to a bank account, imagine you've got your money in a bank account and the bank is paying you 4.7% interest, right? Your savings in the bank account, let's say you've got 100,000, you're very wealthy, you've got 100,000 in your bank account, you will have to pay zakat on that full 100,000 every single year, because you are leaving your money idle and not activating your wealth. And this is Allah's way of telling us, if you can't find anything useful to do with your wealth, at least give 2.5% to the poor from it, right? So with our savings account, if you put the same 100,000 into our savings account, as long as you follow the majority opinion, you don't have to pay 2.5% on that anymore, because your money is going directly into property which is being rented out to customers.
Okay, so the 4.7% you're given,
You
then
get to keep all of it.
you get to keep all of it, and then you've got the 2.5% that you don't have to pay in zakat.
Correct.
So in equivalence, if you to get the same return on a bank account or even an Islamic bank account, because Islamic bank accounts are also effectively a debt-based contract, you'd need to you need a 2.5% higher return to get the same real rate of return.
So you in another bank account, if you were earning 7.3%, right, you would then net 2.5% off of that for zakat, and you would end up with 4.7%. Whereas with us, you get the 4.7% and you don't have to net any zakat off.
Exactly.
So you're left with whatever you take, you get to keep. You don't have to pay anything else on top of it.
So it's an extra 2.5% if you think about it.
It's like
to 7 point.
Exactly.
And you can understand the wisdom of, we call this the hikmah of a hukum, because some people ask, why is zakat not due on this? Shouldn't we pay zakat and it goes to the poor? It's a good thing, and it's really important that we encourage. It's a pillar of Islam. We encourage the payment of zakat, and people who aren't paying zakat, we encourage them to pay zakat. But there's wisdom in everything that Allah gives us. We don't make these rules up. Allah has given us these rules, and we've come across scenarios where, suppose somebody is on a middle income or a lower than average income, and they're really struggling to save up for a home, and they're in a council property or they're in temporary accommodation or they're renting and their landlord keeps throwing them out every year, and their children have to change school and it creates trauma, and their wife can't settle down and there's damp, and there isn't dignity in that person's life, and that person's struggling to raise a deposit to buy a home on, say, an Islamic finance or Islamic bank mortgage or with us, right? Now, if they're saving up, if every year they have to pay 2.5%, every 4 years they're losing 10% of that deposit, right? Now that person isn't in penury, they're not eligible to receive zakat, they're not sort of in poverty, but that person's really struggling, you see. And so sometimes you can see the hikmah, the wisdom behind Allah's laws in situations like this, where Allah is saying, well, actually, if you can activate your money into a purposeful economic activity, give somebody else a home while you wait, get a bit of return while you wait, and increase your deposit, then you don't have to pay zakat on that, and then Allah is helping that person raise a deposit to get into a home.
Helping on a macro level.
Yeah, exactly. Yeah.
Okay, so what protection does the customers have?
Yeah, so the way we've structured this, the customer has what we call an equity buffer, and they have a lot of flexibility in their payments. So I'll go through that. Let's consider a conventional mortgage, or even an Islamic bank mortgage, where your monthly payment is, let's say, £1,000, which is your interest plus your capital repayment, or with an Islamic bank, your rent plus your equity purchase. Both of those elements are obligatory in both of those situations. So in a month, your car breaks down, you have to pay the mechanic, you've only got £800 in your pocket. You can't meet the £1,000. What that means is you're in default, and the bank is maybe going to give you 2 months payment holiday to make good on that default. A conventional bank will charge you interest on that as well in the middle. And if you can't make good on that shortfall, the bank is going to take your house away from you. With our product, the rental element is obligatory. Alhamdulillah. The equity purchase is not. So your target monthly payment may still be £1,000, which is your rent, plus your target level of equity purchase to get to full home ownership. But that bit is optional. So in a month, maybe of that 1,000, let's say 600 is rent and 400 is equity purchase. In a month, you've only got £800 in your pocket. You can choose to pay your 600 rent and only purchase £200 of equity that month. So it gives you enormous breathing room in times of difficulty. And you can manage this all through our app. You can go into our app anytime and change your payments according to your needs. We give enormous flexibility to the customer. Let's say the customer loses their job and can't even afford to pay their £600 rent. Well, with our structure, every time you purchase equity, you get actual share certificates, tangible proof of your ownership. And so what you can do is fall back on what we call your equity buffer. In times of difficulty, if you can't pay us in cash, you can pay us from your equity buffer instead. And to put this into perspective, an average customer who has 10% initial equity, deposit if you like, if they lose their job on day one without ever having made a payment, that 10% equity buffer will last the average customer 2 to 4 years. So that's a huge amount of security, so that if the worst case happens, you lose your job, you're down on your knees, the last thing you have to think is, how am I going to pay the bank, right? You've got security of the roof over your head, so you can focus on what's important, getting back on your feet, finding another job and starting to make payments again, because we think it's reprehensible that when a customer is down on their knees, going through the hardest time of their life, the bank then comes and kicks them out of their house. We personally think that should be illegal. And actually, the etiquette of Islam teaches us when your customer is facing difficulties, you grant them ease rather than further hardship. And that's the approach we take at Fither.
Okay, mashallah, amazing. So are you guys regulated by the FCA? And if not, why not?
Yeah, really good question. So it's important to note that we went through the full regulatory process with the FCA. We went through a full 2-year process. The FCA reviewed every single part of our product, and they themselves concluded it doesn't fall within the regulatory remit. The reason for this is if you look at conventional mortgages, a conventional mortgage is a lifelong debt. And many of your listeners may not be aware the word mortgage actually means death grip. It comes from French, and many of you will recognize the word mort, which means death. So the word mortgage means death grip because you are effectively in this grip for the rest of your life. So you have a lifelong debt to the bank. If that product is the wrong product for you, it's going to ruin your life without a doubt. That's why it has to be very heavily regulated. Now take the opposite extreme when you're renting from a landlord. If you're renting from a landlord and it's the wrong property for you, it won't ruin your life. You can simply move on to another property. I'm not saying it's easy, but it's definitely not going to ruin your life in the same way a lifelong debt will. And that's why landlords do not need to be regulated by the FCA, because there's much less risk to the consumer. Our product, as I explained earlier, is effectively a landlord-tenant product. You're simply renting, you have no debt. And because there is no debt, it's not going to ruin your life. You can stop, change, move on anytime you like. So the FCA themselves concluded actually this does not need to be regulated. And actually after year 1, they came to that conclusion. And funny story, we went to them and said, why don't you regulate us anyway? Because it will give confidence to our customers. So we went through another whole 1-year process with them, and they concluded, look, we're not set up to regulate entities that don't need to be regulated. Just like if a landlord went to the FCA and said, why don't you regulate me? The FCA would say, no, you're a landlord, you don't need to be regulated. And we are in the same situation.
So what if Fither goes bust?
Yeah, really good question. So you can think of Fither like the landlord, right? If Fither as an entity were to go bust, actually from the customer's perspective, there's no one to collect their rent anymore. So funnily enough, it just means they've got no one collecting their rent anymore. But the house is still theirs, they still have a lease, they still have the right to live in the property. It just means there's no one to collect their rent. But we've actually structured it very specifically to protect customers in that situation. So all of the houses are owned by a separate entity rather than being owned by Fither. That separate entity is when you open a savings account with us, you get shares in that entity. When you're a customer, your shares transform into your partnership rights over the property. And that means this entity that owns the properties is not owned by Fither. Fither just has a 1 penny share in it, which allows us to manage it. But it's actually owned by our customers and our savings account holders, which means think of a very simple case where you own a company and you have an accountant managing your company for you. If anything happens to your accountant, you still own that company, you still own those assets, you don't make any loss. You can find another accountant to manage your company for you. And this is exactly how our structure works. Fither is really like an accountant managing the company on behalf of our customers and savers. But if anything was to happen to us, we're no different to an accountant managing your company. It's still your company, it still belongs to you.
Okay, so does that answer the question of what is the likelihood of the funding vehicle going bust?
Right, no, so that's a separate question. So the entity that owns all of the underlying properties...
Yes, account, yeah. Then, yeah.
So what causes companies to go bust? It's really debt, when the company cannot pay the money that it owes to its creditors, right? Now, this funding vehicle, first of all, it's important to clarify, all of Fither's expenses are covered by Fither itself. Okay. So this funding vehicle isn't responsible for those expenses. Fither is a separate company that covers its own expenses. Yeah. The only expenses in this funding vehicle, by the way, there is no debt in any part of our structure, not at the Fither level, not at the funding vehicle level. Okay. So debt is the number one thing that causes companies to go bust, and there's no debt anywhere in our structure, alhamdulillah. So at the funding vehicle level, the only expenses are actually bank account charges, which are very, very minimal. And once a year, we get that entity audited because, again, it's good practice to have an independent accountant audit that company and make sure it's running smoothly and make sure the numbers are all stacking up, and that gives confidence to our investors and customers as well. But those are basically the only expenses of that company. And as a result, it's what you would call bankruptcy remote, because it has very, very few creditors. So the likelihood of that, we would hope, would be extremely remote.
So repeat that again, the last bit, the risk of...
So the number one thing which causes companies to go bust is debt and not being able to pay its creditors. Now, in this instance, the funding company has no debt, which is the biggest reason for companies going bust, and its creditors are very, very few. It's the bank account charges and once a year the auditor fees. In the worst case scenario, the auditor fee is, something which in that scenario wouldn't have to be paid, right? That's something we elect to do yearly, right? And the bank account charges are very, very minimal. So it has very, very few creditors, and therefore it should be very, very bankruptcy remote.
Okay, so before we go to how people can apply, so if somebody buys a share of the house, I heard, I don't know, correct me, that they are not actually buying the share of the house, but the share of the company. Is this true? Or is there a clear contract that shows that this individual who buys 50% of the house owns 50% of the house?
Yeah. So the way it works is, imagine let's take a simple example. So you could buy a house and you could buy it directly and have it in your name, or you could set up a company and then have the company buy the house. So you fully own the company, and then the company buys the house. So you own the house, but indirectly through the company, right? Now, let's now take it as though you're buying the house in shares with us. So we set up a company together, and you put in 50,000, we put in 50,000 to the company, and then the company owns that property, right? But because you have a share in the company and we have a share in the company, we are effectively co-owners of that property. Now, if you scale that up and you say, right, let's have one company which will own all of the properties for all. You see?
Okay, so basically, even though it seems like you're investing in the shares of the company, it's actually owning their specific property.
That's right.
And then they are buying out the shares of, let's say, individuals in the savings accounts, money who's been used to buy that house. They are solely buying those shares out.
Yeah, so the way the deed works is it says if it's a £100,000 property and you've got £50,000 of shares, your partnership rights are 50%. That means your rent is reduced by 50% because you're not paying rent on the share that you own. It means if the property is sold, you have a right to 50% of the proceeds. So it dictates your partnership rights based on how many shares you have in the company. And actually, just by having shares in the company, you are one of the ultimate beneficial owners of that property anyway, because you are one of the owners of the company that owns the property.
But specifically, my cut of the share would be made clear on that specific property. And then you might have thousands of other people who's... okay.
And so simple example, with the £100,000 house, once your shares in the company reach £100,000, at that point, we would transfer the property to you, and then that's the end of the contract.
Okay, interesting. So then people are going to ask is, for those who are happy with the answers, how do they apply?
Yeah, so it's important to mention here that we do have a waiting list. And as you can imagine, this is a radically, refreshingly different product. So we've got a huge amount of demand, alhamdulillah. So anybody can sign up to the waiting list by just going onto the website and signing up. But the waiting list is quite long. We do have a shortcut. And basically, anybody who opens a savings account with us, specifically a home savings account, so a savings account for people looking to buy homes, they're feeding into the system. And they're supporting this giant committee structure that Sheikh Salman talked about. And so we reward them by serving them quicker. So if you just want to get on the waiting list, that's fine. But if you support the system and put your deposit in sooner and allow your deposit to be used to help others while you wait, then what we do is we promote you onto what we call a priority waiting list, and we serve you quicker. And there's full details of that on our website, inshallah. And then when your turn comes, we reach out to you and say, okay, your turn is here. Now it's time for you to start looking for a house, and then we take you through that whole journey.
Okay, interesting. I mean, I don't really have any other questions to ask. Personally, like I'm personally satisfied. And obviously with this stuff, because as public figures, we're very careful who we associate with, who we work with when it comes to other da'is, etc. Because at the end of the day, not that we're anything special, but it's just affiliation. So when it comes to this, when it comes to people's money as well, like I said before, Dr. Salman, Sheikh Salman, may Allah bless him, yourself, Sheikh Haytham being behind this, I've asked relevant questions. I don't see any, I would say I believe that I've tied my camel to a certain extent. But the Prophet ﷺ said to the man who was going to, I think, to the masjid, Sheikh, I can't remember, and he left his camel untied, and he said, I put my trust in Allah. Well, interesting thing, in those times, the people had more tawakkul than doing their work. Today we have people who are not just tying their camel is dead, because they're too focused on thinking it's in their hands, and the camel has sadly died, and they have no tawakkul sadly. So I believe I've tied my camel. I will be doing istikhara, and after istikhara, if this video goes public, that means I trust it. Alhamdulillah, I've spoken to you guys, and we assume the best of the believers. May Allah bless you guys and preserve you guys for trying to benefit the ummah. I do see that in you guys. And yeah, may Allah bless you guys. And guys, if you're watching it and you are convinced by it, you can ask further questions. You can get in contact with them. We'll put all the contact details at the description box below. And yeah, come here, ask more questions if you would like to, inshallah. Those are the main questions I have asked. And yeah, that's all I have to say, brothers and sisters. And yeah, check it out, and maybe you can buy a first house with them. Or if you have some kind of money sitting around, you can invest it in their savings account, and let that inshallah benefit you and your family. Till next time, assalamu alaikum wa rahmatullahi wa barakatuh.